Hi, everyone. This is Jason Bjerk of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He just wrote a book that came out in the last 6 months or so. It's actually the top one or two. It alternates between the top finance book on Amazon, The Big Print, What Happened to America and How Sound Money Will Fix It. He also is a gold fund manager and a Bitcoin fund manager at the Bitcoin Opportunity Fund, which he co-founded. Lawrence Lepard, thank you for joining me again.
Hey, great to be with you, Jason. I always enjoy our conversations.
Me too. You have a really good balance here. You cover Bitcoin and gold, and ironically, those are two of the best assets that are going up a lot the last couple of months lately. There's been big rallies in Bitcoin and
Yeah,
gold.
who would have known, right? I mean, maybe there's something going on.
Well, or like you said in your book, basically, we're starting to see the cracks now in government
Yes.
bonds and fiat currencies, and it's not just the U.S. dollars, the Japanese yen, and many other currencies and government bonds
Yeah.
too.
Yeah, it's really correct. I mean, most of your listeners already know this, but the big central theme is that we are in a sovereign debt crisis driven by the fact that governments all over the world are spending way too much money and using debt to do so, and then monetizing the debt by printing money. And so this 40-year deflationary trend that we enjoyed from 1980 into the early 2020s has kind of reversed. I mean, COVID was, in my opinion, kind of the turning point, and we now live in an inflationary world. And so, it's a whole new different set of rules for investing. And if in 2020 you'd bought gold or you'd bought Bitcoin, versus buying a long-term, a 30-year, 10-year, 20-year government bond, you'd be doing much better, right? I mean, gold and Bitcoin have just crushed bonds, and so the financial world is changing, but a lot of people don't really recognize it yet. Some do, probably most of your listeners do because they're interested in this stuff, but most of the world doesn't see it yet.
I totally agree. The last couple of months, to add your points there, uh, Bitcoin and gold have both rallied enormously. We've had huge rallies. I think Bitcoin went from it bottomed around on the chart around 74,000, and then it got up to almost 110,000 before a little correction here. It's still well above $100,000 when we're recording this interview on Tuesday, June 3rd, 2025. And the gold price, everyone was saying the gold price is headed back down to 2,700. There's going to be a huge correction, a washout. We had a brief correction in the gold price. It got to 3,200, give or take. And then there was news coming out with the Swiss refiners with demand and Chinese demand and People's Bank of China that the Chinese demand and the central bank demand, especially for Swiss refiners that are recasting those old gold coins and bars, that the demand is just exploding again.
That's right. And I think the other interesting thing, I mean, so the signal there, right? If gold is reaching record highs and Bitcoin is reaching record highs, and the one piece of that puzzle that's kind of been disappointing, it has not reached record highs, is silver. Although we're talking at a time where I feel like we're right on the edge of silver breaking out. If we get through 35, 36, I think we're going to squirt up to 40 and then 50, not that far thereafter. So you've got these sound money assets working extremely well. And then in turn, you've got these bonds not working very well. I mean, if you go back and you look at, any of the bond markets, they're all down very substantially since 2020. And the most recent kind of alarm case was the Japanese 40-year, the Japanese government bond 40-year, which, started 2025 at 2.65% and, rapidly, in less than 6 months, squirted up to 3.7 at its high a few days ago, or about a week ago. And of course, Japan, obviously, as we discussed before the show, came in and intervened and used swap lines to do so, probably. But and that's kind of the same story for all the other bond markets as well. I mean, that the U.S. 30-year has gone up very substantially since COVID came along. So it's a case of the chickens coming home to roost on these on sovereign debt because of the irresponsibility of the governments. I mean, I'm just looking at my chart here now, and in 2020, this is interesting. The 30-year government bond in early 2020 was trading at 1.57. So isn't that something? I mean, that's like wow. And today, that same 30-year is yielding 4.9. Now, admittedly, that's 5 years' time, but still, it's been, if you owned one of those in 2020, you've lost a lot of money.
Well, look at all the money supply growth from the US and other governments, and then
Well, that's
also
right.
the growth in the budget deficits, specifically the US. But it was a lot of these governments. I mean, there was absolutely enormous budget deficits and money supply growth pretty much across the board during the pandemic, and a lot of
Right.
these governments didn't cut back. I mean, we started to see, Lawrence, a lot of the gold price, whether it was Australian dollar, Japanese yen, it started to go parabolic before the US dollar gold price. So you and me were doing interviews saying that eventually the US dollar gold price would probably start to catch up to that.
That's exactly right. I mean, it took a while. There was a delay. And it's interesting, gold moved a little bit before the Bitcoin price moved. I mean, but they both moved substantially higher. And in spite of the fact that, Powell has not really cut rates all that much. And I think one of the more interesting charts, and it's all over Twitter, anyone can find it, is the chart that shows, gold price compared to real interest rates. I mean, typically, real interest rates went up. When real interest rates go up, and that means that the yield on bonds, compared to the underlying inflation, when that gets larger, in theory, gold shouldn't do well. And yet, and basically when 2020 happened, and really when we grabbed the Russian reserves in 2022, that's when it really took hold. What we've now seen is just, gold going up relentlessly in spite of Powell's trying to, control the monetary system with higher rates. And I've said this many times, and I'm sure you agree with me that the Fed is really trapped. I mean, they just, they can't fulfill their dual mandate. They're trying to control inflation, but to do so, they would have to raise rates, and if they do that, they're going to blow up the economy. And this goes back to my fundamental premise that I lay out in the book in detail, which is if you're growing GDP at a rate, the gross domestic product, growing that at a rate that's slower than the rate at which your debt grows. Death, that's a Freudian slip.
Death
If
of
you grow
fiat
that
currencies
at a
and
rate
government
that's
bonds.
slower than your debt grows, eventually you run into a problem. I mean, the book lays it out. There are all these cases. This is, it's funny, Jason, as you know, it's happening in the U.S. now, but this happened in a lot of other countries before. It's not as though we haven't seen this model. We just haven't seen it in, the world's biggest country with a reserve currency. But if you do certain things, you get the same results. And all these other countries that did what we're doing, they had very, very high inflation. In some cases, they had, currency collapse. I don't know if we'll have that, but certainly it's not good for inflation. The situation we're
Well,
in, almost, in my opinion, almost guarantees that we are going to have, a lot of inflation going forward.
Well, also the Fed raising interest rates, what it was supposed to kill demand, the Keynesian solution, I'm using air quotes here, to
Yeah,
slowing down or stopping inflation, supposed to kill demand. The private sector is supposed to not make as much capital investments or hire employees, but we have a situation where DC budget deficits, they haven't changed. So
yeah,
the higher interest rates, the math problem just gets worse, Lawrence, when the Fed raises interest rates. So it actually didn't stop inflation because DC didn't stop spending. The budget deficits,
that's right.
coupled with the higher interest payments, it just makes the math problem worse at a faster rate.
Absolutely, and it's I think one of the things you're pointing out and alluding to is when interest rates are 1, 2, 3% like they were back before COVID, and you have and I remember mortgage rates were 3%. Some of us got mortgages at that level. When that's the case, the government carrying 30 some odd trillion, now it's 37, but at the time it was probably 30 of debt. You can do it because your carrying costs a couple percent. But when you take the interest rates up a lot, and the whole treasury curve now is, kind of in the fours and fives, not all of it, but most of it's very close to it. That your cost just goes up, and so the federal government now spends about 1.2 trillion dollars where at that rate of interest cost, whereas that used to be back in the old days, 5, 7 years ago, it was 300 or 400 billion. So that's, I mean, we
Huge
spend
increase. Yeah,
a
huge
huge
increase
increase,
for
and we spend so we're spending more on interest than we spend on defense, and it's approaching what we spend on Social Security. So, it's I kind of make the illusion that it's kind of what the U.S. is behaving like. They're behaving like that family that has a certain amount of income, and they use credit cards to live beyond their income. And then when they can't make the minimum payments on a credit card, they take out a new credit card, and they start paying the minimums on the old ones with the new one. And what they have to do is they have to keep taking out new cards, and eventually, at some point, the flow of new cards gets cut off. And in the case of the U.S., what that means is the bond market is going to say no mas. We're not we're just not buying these bonds anymore because we know that you guys are out of control in spending. And a point I want to touch on that you mentioned earlier that I think is so important COVID really changed the world. I mean, there was a time when the federal government spent, I think it was like 3.7 trillion a year. But anyway, COVID, I've got a chart in my book that shows how COVID really jacked the spending. And I get it. It's a manufactured, but it's a crisis, so fine. So you got to increase the spending. But just like in '08, what happened is it didn't go back down. Okay, so the government's got to spend all this money to deal with an emergency. Well, the emergency's over, and they kept spending more money. So,
Well,
you
look
know,
at the big beautiful bill, right? So yes, the
yeah,
tax
right.
cuts and some of the other low taxes are good for small businesses and individual consumers, but DC, in order to get the bill passed, I mean, we were talking before we started recording, they put in a ton of extra spending stuff
Oh,
just to get so Trump will market this as a win, right? But
well,
Elon
yeah, and
Musk and
then
other people, Thomas Massey, all the other libertarians who are staunch to their principles, are saying, look at all the other hundreds of billions or trillions of extra
yeah.
spending that was hidden.
Yeah, I mean, when Trump came in, there was so much hope for DOGE as a solution to cut costs. And of course, Elon was unrealistic in his projections, but that's fine. You got to be aggressive. And then, even he's now fed up with it and he's throwing his arms up in disgust. I mean, it's kind of like the guy in that old movie, Mr. Smith Goes to Washington. You get there and you just realize there's just not much you can do because the system is rigged against you and rigged to support the system. Do you know what I mean? And so,
It's like the old Roman Republic with the Senate, how corrupt it was. Everyone knew how corrupt the Roman Republic, the Senate was. That basically, like, no one wanted to stop all their wealth creation, their self enrichment, and
that's the
graft
problem.
and yeah, waste, fraud, corruption, and abuse. This is a typical end of empire behavior. See this whether it's all these Chinese dynasties, the Mongolian Empire, Roman Empire, British Empire throughout history. It's very, very common with the size of government and the bureaucracy, the military, the waste, fraud, corruption, and abuse. I think before the British Empire ended, there was also a huge welfare state too.
There was, and so it's really disheartening as an American to watch it all, to watch your great country, and it's not great in every respect, but it's still a very good country. Go down this path, and I mean, I give huge props to the guys in Congress like Rand Paul and Massey and others who are trying to fight it, but the system is just too big and entrenched, and so here we are. But obviously, what your listeners are probably most interested in is the implications of that for, investors. We're all just trying to save money and protect ourselves. And as I tell all my clients, rule number one is you want to invest in things the government can't print because the government is set up to print money. It doesn't always all come at once. There are periods where they print less.
Well, yeah, look at the Republicans. They have a slight majority in Congress, and Mitch McConnell, Lindsey Graham, Dan Crenshaw, and these guys, I mean, like, they want to spend money on the military. They want to upgrade the military. They want to find new war.
Absolutely.
Yeah, so even if they're not approving green energy projects like the Democrats, they still want to spend. I don't
Of
actually see
course.
the main Republicans that have been in Congress for 5, 10 years or more. They're not talking about spending cuts.
No, I mean they're talking about building a new, jet fighter aircraft, which by the way might even be obsolete in the future. I mean, warfare in the future might be kind of drone driven, and the Chinese kind of lead us in that. And yeah, so it's a rather depressing situation, but it's actually encouraging if you understand what it means. And what it means is you got to own stuff the government can't print. That's gold, silver, and Bitcoin. And I think there'll be a fairly large wealth transfer to the people who do. I mean, the way to get rich in the past 10 years was to own the Mag 7. They kind of outperformed everything, but I think that trade's kind of over. Not that those are bad companies, just that I think they're fully valued. And, I think on a go forward basis, I look around, I look at say what's undervalued relative to everything else. It's sound money. I mean, it's still, the entire gold stock universe is about $700 billion. I mean, there's like $1.5 trillion of stocks out there in the world. And so the gold stocks are a small sliver of that. All of Bitcoin is 2 trillion. I'm sorry, there are $150 trillion of stocks out there. All of Bitcoin is only $2 trillion. I mean, all financial assets are only $900 trillion. And so you've got gold at 20, gold stocks at under 1, and Bitcoin at under 2 or right around 2. So you've got maybe, 20 some odd trillion of what I call sound money investments in a world of $900 trillion where governments are out of control. I mean, it doesn't take much for all those people who are in those other assets like bonds or cash or stocks or real estate to say, huh, give me some of that stuff that the government can't print. And, I mean, if 900 trillion comes after 22 trillion, well, the 22 is going to have to go up in price a lot.
Well, I would
So,
also say that that 20 trillion you said for the gold number, a lot of that, I haven't seen anyone try to itemize that. I think a lot of it's probably paper gold. So if people start asking for their actual metal, then there's going to
well,
be a
that's
problem.
right. That's right. Some of it is paper gold, and some of it's really not tradable. It's interesting. The World Gold Council has a great chart that shows, all the gold that's been mined since the beginning of time, about 210,000 tons, is still around unless it, a shipwreck or something. And so, but, so maybe 20% of it's in museums and antiquities, so we're not going to sell that. I mean, those museums aren't going to melt down their gold. And then another 30 to 40% is around women's necks all over the world. It's jewelry. And that's not, that could get melted down if gold goes bananas, and some of it will. But, if you actually, out of the 20 trillion of, outstanding gold in the world today, maybe only 7 trillion of it is actually in the form of coins and bars. So, so it's even smaller than 20 that's quote unquote available for sale. You know what I mean?
So
So,
would you say then the reason that gold and Bitcoin and also to a lesser extent some US stocks, the reason they're going up together is based on the Cantillon effect and whether it's individual investors, retail investors, or institutional investors. So those are larger pools of capital like pension funds or hedge funds, and then also central banks. They're looking at the US federal government finances, the currency supply, and these other budget deficits from other governments, and they're saying we have to hedge, we have to buy real stuff, we have
I
to get
would,
exposed.
and I would say it's less the Cantillon effect, which is really the Cantillon describes people can borrow cheap and invest in things that have yield. I would say this is actually more what, and I know you know what this means, Gresham's law, which is to say that when people, there are various forms of money, there are various forms of assets, and when you know that one asset's losing value, and hey, we know the dollar is losing value over time. I mean, in 1975, when I was a kid, you could buy a car for 800 bucks. Now cars are 50,000 bucks. I mean, it's just the
Well,
dollar has lost all of its value
well,
consistently over time, and it's getting worse. What happens is people say, "Well, I'm not going to save in dollar terms. I'm going to save in something that will not lose its value." And the three most obvious ones we keep discussing are gold, silver, and Bitcoin because Bitcoin because it's limited in supply, and gold, same thing. I mean, there's a geological limit to the amount of gold in the world, and we're only adding 1.7% a year to the supply. And so people will spend the money that they know is no good. That is to say, they'll get rid of their dollars and the money they want to save, they'll go, you know what, I'm not going to save it in a savings account, or I'm not going to put it in a bond that pays me 3% or 4%. I'm going to put it in gold or silver or Bitcoin because I know those are going to go up at more than 3 or 4% a year. And I have a decent chance of protecting my purchasing power on a go forward basis. And then if you want to speculate, you get into gold mining stocks and other things. But
well, let me explain
yeah,
Gresham's law for the listeners out there. So, the best case study for it is the legal tender laws, recent one that the US passed.
right,
And so, Gresham's law, if I could summarize it really quickly, is where bad money, and I'm using air quotes with money, so bad government fiat currencies, legal tender, forced out the good money. So, the most recent example in the US was the legal tender laws, where you had what the silver certificates, right, or the silver dollars. So, that's when
right.
junk silver became popular. So, you could literally take your change, right, to the bank and you could sift through what get silver dimes, you could get what Kennedy half dollars, you could get silver dollars. So there was a ton of people as the legal tender laws were changing over, right? There was a ton of people sifting through and getting all that silver before it was taken out of the currency supply.
Yeah, and there's a really interesting story surrounding that I'll just bring up. I mean, so yeah, pre 64, all our coins were actually made out of silver, right? And so a quarter was a quarter of an ounce of silver. And basically, a quarter of an ounce of silver. So if you have a pre 1964 quarter, that's worth, well, silver's at 30 some odd dollars today, so that's worth, $7.50 in silver weight, right?
Yeah,
Um,
so if you wanted to do the work, you could take a $20 bill and ask for change and sort through and find the actual silver
yeah.
coins.
Well,
Yeah.
yeah, you could. You know what I mean, that's been done for a long time now. So there aren't many of those silver coins still floating around
Oh
because
yeah, those are long gone for the most
because
part.
of,
Yeah,
because of
I
Gresham's
meant at the
law.
time though during the switchover. Yeah.
Yeah, there were a lot of people who did that. They were very smart, and they said, "Hey, you know what? This is an old coin. This is a 1961 coin. I'm not spending that one. I'm keeping that because I know that's real silver." Whereas the 1966 quarter was made out of copper with a silver plating. So, Yeah, I mean that's Gresham's law. You keep the good money, you throw away the bad.
We might see that with copper pennies, right? Because didn't they
You could,
switch
well,
to like nickel
did you
or
just see
zinc?
it costs more than a penny to make a penny. So they're now, I don't know. I read an article and it was unclear what the conclusion was going to be, but I think they might stop actually making pennies. So you might not be able to get penny change
Well, the
in
U.S. Mint is not efficient at all. Let's just put it that way. Yeah, I'm sure you know because you bought physical gold and silver, like for the Silver Eagles, and how they're marked up, and how inefficient the U.S. Mint is at making them. Yeah.
Well, there's that too. Yeah, there's that too. But yeah, I mean, it's a broken monetary system at many levels, and those of us in this world, the world you and I live in, know that and understand that. The unfortunate thing is that the average American is just trying to, do their job, pay their bills, get ahead. They can't figure out why it's so rough. And I think my book actually helps them. I mean, shilling my book here a little bit. I mean, I tried to write it to the average person. I tried to make it not complicated. And so it's designed to kind of explain to people how this, deck of cards has been stacked against them, why the groceries are so expensive, why they're suffering, and then, and then what to do. I mean, how we can protect ourselves, how we can, invest in things that will hold purchasing power, and more importantly, maybe create a political movement to try and return to sound money, because it's sound money is an important thing, and that's the underlying problem that we've got, that we, over 200 years. I mean, the founders of the country, put in the Constitution that gold and silver are the only things that could be money. So they understood sound money. The book lays that out. And then, what happened though, sadly, is over a bunch of years, that kind of common knowledge principle got diluted, and then the Keynesians just completely threw it out the window. And
Well,
1971, when Nixon got off the gold standard, right?
oh yeah, well, to add to your points there, I mean, for gold and silver demand, I mean, most people, most Americans especially, are not buying physical gold and silver. Other than Costco sales, the bullion dealers I talked to, Lawrence, and the wholesalers, the publicly traded companies, A-Mark, they're doing very, very bad. So the physical
Really? I'm
gold,
surprised. I thought they were doing okay. I've heard.
no, 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 no,
I
no. A-Mark is buying companies for 100 million valuation, and they only have 1 million or 2 million EBITDA. So they're almost like no earnings at all.
Oh, interesting. I wasn't aware of that. I thought someone were doing well. I do know that the Costco guys, now maybe they weren't buying that much, but I do know that they were reporting that what they bought got sold pretty quickly. So,
Costco
and if you
selling
look at,
out. That's
yeah,
the
if you
only
look
one I
at
know that's selling out.
Yeah, if you look at China too, and you read some of the articles from over there, if they're to be believed, it's gold's very popular over there. I mean, there are parts of the world that really have a better understanding of the fact that gold is sound money and it protects your purchasing power. I mean, another area, and I've interfaced with a lot of these people, they're neat people, are South Americans in general, Argentinians and Brazilians and so forth, because they've had hyperinflations there. I mean,
Yep.
one of the disadvantages or advantages, I guess, is that the United States was pretty well managed for many years. I mean, that's changed, but there was a long period of time where there wasn't a lot of inflation. Things were reasonably well managed, and so it's not a threat that most people here perceive as being important. But if you look at the signals and you watch the patterns and you compare it to other historical examples, I can tell you it's a really big threat right now. I mean, people need to pay attention to it right now. I mean, you really need to read my book and understand what's going on, because it's going to have a meaningful impact, whether you own this stuff or not. It's going to have 10 years from now, the people who own it are going to be in a much better position than those who don't. I mean, I believe that like with every bone in my body. So, and I make that case in the book, and the book's not that expensive. I mean, for $20 you can learn the story. So, people need to, I think, study it and understand why things are changing in this area.
Yeah, unfortunately, Americans, I think, Lawrence, are chasing like meme coins, altcoins, stock
Yeah.
options, meme
Yeah.
stocks. They're trying to get rich quick. They're chasing stocks and kind of non-Bitcoin. They're not Bitcoin maximalists. They're chasing kind of these super risky, no supply cap, copy and paste jobs of the Bitcoin blockchain called code altcoins. The
Yeah.
bullion dealers, I've interviewed a good amount of bullion dealers the last couple of months. I mean, most of them are not doing well at all. The ones in
Wow.
the US and Canada, yeah, they're not doing well at all. Some of
That's
them
unfortunate. That's not great, because I'd like to see more Americans protect themselves.
Well, the central banks, so this is why we've had a stealth bull market here, and the retail investor in the US hasn't really participated in it. It's been Asian retail demand and non G7 central banks that are basically hedging the dollars and the treasuries, like we were talking about earlier, that like basically there's a supply demand issue in the treasury market. We've seen Jamie Dimon of JP Morgan Bank, and they're a primary dealer, so they would know about problems in the treasury market, right? Because they
Yeah,
see.
I found that amazing that he came out and said, I mean, one of the things that is kind of interesting about this whole episode is that you're seeing some very big, high-profile people saying, "Hey, we got an issue here." I mean, Jerome Powell came out and recited Stein's law. He said, this can't go on forever, this deficit spending. So, I hear those kinds of things. And I think to myself, okay, great guys, what do you got for us? I mean, we're not in positions of power. You are. So where's the alternative? I mean, other than a Thomas Massey or a Rand Paul, I don't hear anybody talking about a return to sound money, which is what we need to do,
Well, you can be your own central banker, right? So you can hedge
That's
yourself.
right.
Yeah, yeah, you can be your own. You can hedge with gold, silver,
Yeah, well,
Bitcoin, real
it's even
estate,
better than that.
stocks, gold stocks.
Gold mining companies are actual central banks. I mean, they produce money, They pull money out of the ground.
Some of them more efficiently than others.
Well,
Although
that's right. Some of them are no
in
good.
the last 12 months, I would say, Lawrence, like I think the gold mining industry, I haven't looked at the other industries, but I would say they probably have the most free cash flow growth of any industry right now, which
Oh yeah.
is shocking.
It's nuts, but this is true. I mean, it's as you know because you've been in this area a long time. It's a tough industry, and there's some charlatans and there's some bad companies, and it's not every gold mining stock is the same. And so, the market is skeptical and somewhat rightly so. But yes, I mean, if that most of the companies, the average all-in sustaining cost of pulling an ounce out of the ground right now is kind of in the 1,500 to 1,800 range, and so with gold at 3,400, what's it close at today? 33 something. It closed at 33.57 today. I mean, if it costs you 1,800 to pull it out and you sell it for 3,357, that's a hell of a margin. I mean, that's probably one of the largest margins in the gold mining business ever. And
The
so,
industry average, according to the Mining Journal, they tallied it up. They said I think the gross margins are 49% for the industry. So they showed like the top like 20, 25 producers, and the average gross margins are about 49%. So there's
sounds
the
right. And I mean, there are very few businesses that have, that have that kind of a margin. Yeah.
Well, the key here is free cash flow growth. So the market loves that. So if you're looking as an investor, you're looking as a contrarian value investor, and you find an industry that's cheap and hated, and you think things will turn around, you see free cash flow growth, that's where you're going to make, especially if it goes on for a couple years and you're in kind of early before the re-rating occurs with the valuations, that's when you can make a lot of money as an investor. So if you go back and back test a lot of these companies and industries, a lot of the stocks that did the best were the ones that were generating free cash flow growth.
Yeah. That's correct. That is absolutely correct. I mean,
So,
and we focus on that in my fund, but we also do some speculative things. I mean, there's some drill stories and some producers that are pretty good.
so I want to ask you, what do you think the producing gold miners are going to do with their free cash flow? Is there enough free cash flow for almost everything? Let's say like announcing a variable dividend, share buybacks, mergers and acquisitions, exploration drilling. What do you think they're going to do with their free cash flow?
Well, I hope they're going to be intelligent about it and not piss it away, because in the last cycle, some of them did on stupid acquisitions. All of the above, right? I mean, some guys will say, well, we're not going to try and grow. We're just going to dividend this out. Some guys will say, we're going to use it to repurchase shares and push up our stock price. Some guys will use it to intelligently grow. And if they do smart acquisitions, they buy value and develop it. That'll be a worthwhile endeavor on their part, and they'll increase their value. I mean, the one thing that the bigger companies have as an advantage versus the smaller companies is that they have access to capital. I mean, I have small gold companies that have, 1 million ounces in the ground. That 1 million ounces is worth, $3 billion if they could get it out. But the problem is that they've got to find the capital to build the mine, to build the mill and the mine and everything else. And that's very generally very hard to do when your market cap is small. And so the win-win here is for the medium-sized companies that have the capital to buy the small companies. If they pay a fair price or a cheap enough price, they can really do an accretive deal where, they're getting a bunch of ounces and a bunch of future production at a discount. And then, of course, if the seller takes the equity of the buyer as opposed to taking cash, then they'll get to benefit from that accretion. So that's going on in the industry, and there'll be more of that. But as I say, I mean, I do caution people doing this to be careful rolling your own because, I look at all the gold stocks out there, and I mean, like half of them are no good. So it's not just you can't just throw a dart and buy a gold stock.
Oh yeah, I totally agree, especially with some of
Yeah.
these juniors because they could spend all their money on salary for the people running the company or marketing for YouTube videos or podcasts, and they're not spending the money on drilling. So I would look for the larger companies like an Agnico Eagle. I think Agnico Eagle has been very shrewd the last 12 to 18 months. They were doing some of these deals that you talked about with the juniors. They either bought juniors around Canadian Malartic or they went and say funded the whole drill program and bought 30% of the equity of the junior that they can earn in what to 50, 60, 70% of the junior or take them out easier. So they lock these up ahead of time before the gold price actually started moving up. I think those are shrewd moves.
Yeah, exactly. I completely agree with you.
Yeah, and then we just saw what Goldfields over the last 12 to 18 months in the before the market started to turn, we saw Goldfields besides buying what the Osisko mining and the Windfall project, they went and locked up I think 70% of Bonterra next door, all the surrounding land package. So they did that during the bear market when the valuations were cheap. So these shrewd moves will pay off because now like those deals are worth way more money than a couple years ago.
Yeah, exactly.
So
Um,
these companies with free cash flow, I mean, we've just started to see. Would you say we've just started to see acquisitions? Is this the very beginning of mergers and acquisitions?
I think it is. I really do, actually. I think that the industry has been very conservative and careful because in the last cycle, which peaked in 2011, a lot of really stupid acquisitions got done, and a lot of people lost their jobs, and a lot of value was destroyed. And so, in that respect, I think the industry did learn some lessons, and they've been relatively careful in this cycle. And I would actually argue, even in some cases, a little bit too careful. I mean, if I were running a big company and had access to capital, and I looked around it, I mean, there's some juniors that just represent enormous value, and these bigger companies should buy them now while they're still cheap. Of course, what'll tend to happen is they'll wait until we're in a full-fledged bull market and then they'll buy them, but they'll pay a higher price. So, I mean, it's a tricky thing. I mean, you don't want to buy them too early when you don't have a bull market because then you've got the carrying costs of eating all their expenses while you're waiting for the price of gold to go up. But I will say this, I'm involved with a bunch of companies and I'm on the board of a few and I talk to a lot. And I've had, I'd say close to half a dozen situations where a company has said, hey, we've been approached by XYZ bigger company and they want to try and do something with us. And what do you think? And should we talk to them? And so on. So, I mean, that's new. That wasn't happening a year ago or 2 years ago. So yes, I mean, I think the acquisition cycle is beginning, and I think it's going to lead to some good stuff. Now, from a small company investor point of view, I will point out though that one of the frustrating things that happens. I mean, let's say I'm in a company that's got a nice deposit, great prospects. I think it's worth 5 times the current market value. Well, along comes a big company and says, we're going to pay you a premium. Maybe it's 50%, maybe it's even 100% because the numbers are small. What do I do? Do I sell it for 100%, which obviously is a win? But, when I think it's worth 500% of today's price, I'm not sure I want to do that, right?
So it's capping
So,
your upside to. So
yeah, there's a
basically,
certain,
then you
so,
are the shareholders who have the shares of the combined company. They still have some upside, but then the upside, if the
well, if you
company was
get,
separate, is
yeah,
capped.
yeah, the best situation is you get equity in a company that's still small enough where your company that you're selling into it is going to move the needle of the bigger company. And then it's like, okay, then there's kind of a win-win, right? I mean, because as I said earlier, the challenge the small companies have, it's hard to raise money.
Yeah.
And so, and I've done this, like I did this with Amarillo.
Or they run out of money finishing their mine, like what happened with Argonaut
Exactly.
Gold and Mangino, and then the Mangino mine
Exactly.
just falls into the lap of Alamos Gold.
Exactly, and that happens a lot, and so it's a tricky industry in that respect. But I mean, look, if the company that's buying me is a good company, and I think they're not huge, so big that I'm not going to move their needle, and they're going to give me their stock for my stock and pay me a premium for where my stock is, I mean, that's generally speaking, I'm okay with that because I know that, my project will add to their results and then the whole thing will go up in value and so on and so forth. And I know that the odds of getting the mine built with, the bigger companies' balance sheet and the bigger companies' access to cash, they're much higher, right? So,
Well, I mean, like, let's use Equinox Gold as an example, because I
sure.
mean, Equinox had like, yeah, the gold price is higher, and they got Greenstone close to nameplate production capacity, so it's generating free cash flow. But I mean, like, they had a mess with the debt on the balance sheet and the share structure. They bought 100% of Greenstone. They used even more debt and then restructured the debt, and then they just did another acquisition. So you think they're doing too many acquisitions too quickly for the assets?
I don't. I think that one is okay. I mean, I think they've got a really good management team there and they know what they're doing, so they'll be okay. But as you point out, even good management teams, I mean, as the Magino mine as an example was, the people building that and running that weren't bad people. I mean, it's one of the problems with this particular industry, and that is that, you're dealing with rocks, you're dealing with construction, you're dealing with, just unknowns that occur. And in the Magino case, I think they had a lot of stripping costs and a lot more overburden than they thought they had before they could start mining the ore, and that of course led to cost overrun. So one of the things I do when I'm looking at all these opportunities is I just I try to do the worst case scenario. Is this thing so good that even if they've misestimated the cost, it's still going to be okay. You know what I mean? Because if it's marginal and something goes wrong, well, that's a quick way to go out of business. And we've seen that. I mean, there are companies in this industry that fail. I mean, you can go to zero. So that's why I
Especially if it's a
caution.
one asset, to add to your points there,
Well,
especially if
that's
it's a
right.
one or two asset smaller miner like an Argonaut Gold or one of these others and Victoria Gold, and all of a sudden they're trying to increase, bring on this much larger mine that the management team doesn't have experience doing, and then they borrowed a ton of debt to try to build a mine. And if the mine does not come in on time and on budget, then the management team only has bad options. Either have to sell the mine for pennies on the dollar or do a reverse stock split or share dilution. There's so many bad options there for shareholders if the mine does not come in on time and on budget.
That's exactly right. That's very important for people to understand. I mean, there's risk in these things, very substantial risk. So,
But
um,
Canada looks good. I mean, like I didn't think there was this many low cost mines in Canada still. Like whether it's Bear Creek, which is going to start in the next couple of years, or Greenstone, which Equinox just built, or Blackwater, which Artemis Gold, they have the first stage done. I mean, these are some really good low cost mines in Canada. I'm surprised Canada has so many good low cost mines still.
well, they do. I mean, there's a lot of good geology up there. I mean, I was just looking at Amex this morning, and that looks kind of interesting. I mean, we're big holders of B2, and I think the Goose Mine, it wasn't low cost. It's very expensive to build it, but I think the Goose Mine is going to come on and work very well. Yeah, there's a lot of great geology in Canada. And one of the nice things about Canada is it's generally safe. I mean, I worry a little bit about the socialist government up there, increasing the taxes, but I think Canada is aware of how important gold mining is to their overall economy, and they're smart enough not to mess with it. At least that's my hope.
And for the listeners, he just mentioned B2 Gold. There's a spinoff. The company just went IPO in the last 2 weeks. Versamet Royalty. The shares are a spinoff. They're owned by B2 Gold, Equinox Gold, and Sandstorm Gold. Those are the only. I think there's a tiny little fraction, a pension fund that owns a tiny amount, or a private equity fund. But the majority of shares are a VMET on the Vancouver Exchange, and they have the royalties on those B2 Gold, the mine that's under construction, a royalty on Greenstone. It's the new royalty company out there.
Yeah, no, it's an interesting opportunity. I haven't looked at it in depth, but it's very interesting. I mean, all the time there are new things coming along. And I mean, some people are probably listening to this and thinking, well, okay, great. It's hard to buy gold stocks. Which gold stocks do you buy? If you don't mind, I'd like to plug my friend's site. There's a guy named, and you probably are familiar with him. There's a guy named Don Durrett who has a site on Twitter
Oh
and
yeah, he has the largest database. Yeah, he has the largest
yeah,
database
he
of
runs something
juniors.
called Gold Stock Data, and I want to say an annual subscription is like $150. I mean, it's nothing, and what you'll learn on there about these stocks is so valuable. I mean, it's just and he has his top picks, and he's very good. In fact, I use him as a consultant. We pay him to help us understand these companies, and I really highly encourage anybody who's going to roll your own versus just buying the GDXJ, which is really is kind of a big company index anyway, but it'll do fine. If you're going to try and roll your own and buy your own names, you need to do some studying and some work to understand, good and bad. And Don has a very good sense of what is good and what's bad.
I
So,
want to ask you about geopolitical risk because now that
sure.
the gold price is high, we're going to start to see some of these countries look and say like, oh, these mining companies, they can't move the mine, they're generating enormous free cash flow. You know what? We're going to raise the government royalty tax for a gold miner, or a copper miner, or a silver miner. Now we're going to start raising taxes. Are there any countries that, as a gold fund manager, you do not want to put capital into with the mine right now?
Yeah, that's a great question. I mean, to be honest with you, I don't think any country is safe because their government's involved in all these. I mean, who knows? I mean, there was a time when Biden was talking about putting a 10% NSR on American miners. So, and as I say, Canada's pretty socialist in some areas. They could go the wrong direction. So every country has problems. There was a time when I was pretty down on Ecuador, but Lundine's done pretty well, and it appears to be stable. There's some things that going on in Peru. I mean, Bear Creek is there, and there's been some political stuff there that's not wonderful. That at any given time, I mean, there was a time when Argentina was a problem, but now Milei has come in and he's kind of cleaned that up, so that's much better than it used to be. A lot of people are very afraid of Africa. I actually find I don't think there's as much risk in Africa as other places. Some of the former Soviet republics have some pretty weird politics, the stands, the Kazakhstans, and so forth. Some of the Russian gold stocks are hard to own just because it's hard in this world to own Russian stocks in general. I mean, I had a Russian ETF that got taken away from me out of Fidelity when we grabbed all their assets. So Russia's probably kind of uninvestable. I don't own anything there, although they have some good gold mines. Venezuela's always been uninvestable. They have a few gold mines there, but there's really nothing you can invest in. Yeah, so there are places. I mean, the Congo was always really a terrible place, although more recently it's gotten a little better. And there's a
Well,
company there that I kind of like. It's risky, but I like Loncor, which is operating there.
I like
Uh,
to talk about which ones are trending positively for pro mining and which ones are trending negatively. So I would say like certain US states are trending very, very positively with Trump wanting to put up tariffs and wanting to build a
Absolutely.
military stockpile. So I think like Nevada, Arizona, those states, some of the Wyoming, Montana, those states could benefit from pro
Absolutely.
mining. And
Alaska. I mean, there's a beautiful, copper mine down in Arizona that's been kind of held up for years and years. And I think Trump is going to help him get that one through. I've just invested in Getchell Gold, which is in Nevada, which I love. It's a great undervalued situation. And it was thought in the past there might be permitting issues where they are, but one, those issues have kind of gone away, and then two, with the Trump thing, I think it's just, his view is, I mean, the government in the United States is going to be very mining friendly, in terms of rebuilding this country, and
well, especially with tariffs and the US military announcing that they want strategic metal stockpiles. So
well, that's
Trump,
right. Yeah, if you've got a strategic metal as part of your project, I mean, I'm involved with a terrible situation in California called Rise Gold, where the locals shut it down. But they actually have the mine produces gold. It also produces magnesium, and magnesium is a strategic metal. So, you know, we're
didn't
we're yeah, we're working on the possibility of, if we call it a magnesium mine, the U.S. government might get, the Defense Department might get behind us and help us to get it open. So we'll see.
Didn't Trump hire like a former senior executive at Newmont Mining, and he's in charge of fast tracking a lot of mining projects
Yes.
in pro mining U.S. states and
Yes,
stockpiles for.
he did. I can't remember the guy's name off the top of my head, but if you were to grok it or chat GPT it, I'm sure we could find the guy's name.
Well, I know he worked at Newmont Mining for years, so I can't remember if he was CEO, but he was a senior executive at Newmont Mining. So he is in charge. I don't know how much progress he's made because I think it was a couple months ago. He was only hired like 2 months ago, I think, and so he's in charge of trying to streamline, make more efficient the process of fast tracking a lot of these mines in like Arizona and Nevada and Wyoming and Montana and Idaho, maybe even Alaska. Although the environmentalists tend to want to sue more in Alaska.
Yeah.
Look at the Pebble project. I mean, that's like one of the world's largest undeveloped what copper and gold and silver mines. I don't
Yeah.
know if
Yeah, Donlin too. Although Donlin didn't have as much in the way of trouble with the enviros. Pebble was just, I mean, and to be fair, I mean, Pebble, I guess, is set on one of the most beautiful scenic areas of the world. I mean, it's gorgeous. And so, there are those, I haven't been there, but there are those people who tell me that they'll never build a mine there, and they probably never should build a mine there. You know what I mean?
well,
You'd be really,
Argentina though is definitely heading in the right direction. They actually have
oh
a
yeah,
huge tax break, I think, for the next like 2 years, year and a half, 2 years, where if a mining company I think invests $500 million or more, they get huge discounted tax breaks for making the investment and starting construction before the end of 2026.
yeah. I wasn't aware of that, but that doesn't surprise me. I mean, I think. Look, mining, it pays well, and it can, and that's why in Africa, as an example, a lot of these countries, I mean, the local warlords or politicians, I mean, they want to get their pound of flesh, and they do through NSRs and taxes, but they also realize that they don't know how to run these mines themselves, and they also realize that these mines, can afford to pay their people well. And so if you've got people who are unemployed and just scraping by, if they become miners and work for a successful gold mine, they can develop a middle class lifestyle. So it's worked pretty well. And Africa is very richly endowed with gold all the way from South Africa where they started all the way. You go up that western coast of Africa, there's gold all over the place.
And copper, yeah, tons of copper. There's
Yeah,
a
same
lot of
same
really good
thing.
copper and gold deposits. I mean, the one country that everyone sees with the mine confiscation, what is Bear Gold's mine at Mali. So
Well,
that's the
that's right.
one that's the one country that's like trending in the wrong direction with there's
Yeah,
the wars.
Mali's got some political ups and downs, and I mean, in most of Africa, if you operate in a very secure fashion, you can make it work. But these mines they become kind of armed camps. I
I,
mean,
I
we
want to
all,
I want to ask
yeah,
you now about silver mines, platinum and palladium,
yeah.
because we've had a rally now in platinum and palladium, the other precious metals. The kind of redheaded stepchild that has been in the bear market for the last couple of years are platinum and palladium. We've just started to see some rallies in those. Do you think there's good opportunities for silver mines, platinum and palladium, or do you think that because those are byproducts that it's going to be tougher to find economic ones?
Yeah, well, that's a great question. So first, let me just say off the bat, I really don't study platinum and palladium. I know they're important. I know they have industrial applications, but I stick to the monetary metals. So I'm not the best guy to ask about those two. But I will say, with respect to silver, the use cases for silver are just growing left and right. I mean, it's used heavily in solar, and now you've got, Toshiba and others talking about these new solid state batteries that they've developed and they claim can give a car, enough power to go 900 miles and recharge in 15 minutes. And if that develops and they use silver, and if those batteries get widely developed and used in electronic vehicles, the silver demand is going to go up a lot. In fact, I've also seen, projections that show that, at the rate of growth of solar in China, the Chinese solar market could consume half of the world's silver production in any given year. So
That and
um,
China doesn't have a lot of domestic silver mine supply, so
they
they'd have to
don't.
import all the silver.
They don't. And so my view is I'm a enormous silver bull. I mean, just enormous. And I think the price has been suppressed, and I think that's going to change. And when it breaks free, silver is the one commodity that hasn't even hit an all-time high. It's been at $50 twice, once with the Hunch brothers and once in 2011, and right now it's in the low 30s. And so we're not even at an all-time high in a very inflationary world. I mean, gold's at an
And
all-time high, Bitcoin's at an
and
all-time high, silver's not.
And
So
we're
to
only a
me,
little at the
yeah.
$34 price tag, Lawrence. We're only a few dollars over the cost of production. A lot of these silver miners are not low
Yeah.
cost silver producers, so they're only making like their profit margins are way lower than the gold miners right now.
Well, that's
So,
right. And what that means is the operating leverage is really big. I mean, if the price of gold goes up, gold guys are making money, the price of gold goes up. Well, they make more money, but if you're breaking even, at $30 silver and you go to $40 silver, suddenly you just gush profits compared to where you were. And of course, stocks get priced on profit growth. So
yep.
yeah, I'm really, really bulled up on silver, and I own a lot of silver miners in my fund, and I expect them to outperform the gold miners. But to be frank, they've underperformed for a while now. They've been a little bit of a drag on my fund, but I
Well, that's because of the profit margin differential, like I said, because the gold
exactly.
miners the last 12 to 18 months, I mean, I would argue no one's had more profit margin growth and free cash flow growth than the gold miners in any industry. So the gold miners have, relative to the silver miners, have absolutely outperformed them operationally with profit margins and free cash flow.
That's exactly right. So yes, I'm a big silver bull.
But you're starting to see some mining companies, I think Pan American Silver, right? Because for years, right, to survive the bear market in silver, they had to diversify away from silver. They had to shut down silver mines. They had to put them on care and maintenance. They didn't invest in building them. They had to go buy copper and gold mines just to survive. And now I think you're starting to see some dip a toe. What they just bought Mag Silver, that's one of the best producing silver mines in
Yes.
Mexico. So I think you're going to start to see these silver miners or mixed ones that were close to 50-50 gold and silver. You're going to start to see them take a look now that some of the best assets are being bought.
I think that's absolutely right. I think that's absolutely right. And there just aren't that many pure silver miners out there. And I want to see them run up in price before they get bought. I mean, one of my largest holdings is Avino, and stock's gone from 50 cents to $3 in the last 6 months. And it's still undervalued at $3, but you're not going to get the ride from $3 that I got from 50 cents. And so, but it's a pure silver mine, and there aren't that many of those out there.
Or they're in Argentina. Yeah, there's quite a few of them in Argentina, but it looks like
Yes,
some of the larger producers are starting to lock those up because they've had some big silver mining discoveries in Argentina. They haven't been developed yet.
that's correct. That's exactly correct. So,
And for the listeners out there, Argentina, what the Latin argent, right? Argentum, that's silver. So
yeah, yeah. Yeah, so yeah, silver's a great place to be. There are a number of other companies. I mean, I like Silver Tiger. It's a development story down in Mexico. I like Discovery Silver. Just trying to think of some other pure silver plays. There's a really great silver drill story called Southern Silver Exploration that I still think is deeply undervalued. I own a ton of it. So, but it's hard to find good silver stock investments. And, most mines have some silver and some gold. I mean, and even companies like Pan American Silver, the silver's in the name, but to be frank, I think silver's only like 40% of their revenues today. They're really a gold mining company with silver on the side.
well, they
So,
had to survive the bear market, right?
well,
So
that's right. That's exactly right. I mean,
but it looks like with the mag deal, the recent acquisition that they're buying mag silver looks like they're starting to get back into silver again.
I think that's right. Yeah, I mean, First Majestic is another one I really love, but even they went gold. I mean, they bought, Bingham Canyon, which obviously turned into a disaster, but it'll get fixed. And, there's a lot of silver coming out of that company in the long term. And there's some very esoteric companies that don't trade so well here, but they're great. Like Fresnillo is a beautiful, one of the world's largest silver producers. It trades in London, but, it's still extremely cheap with a lot of upside. So, yeah, I mean, we're in all of those. And, I'm looking forward to the next 2 or 3 years being just, a really good time to own these assets. There'll come a time when they'll get pricier and maybe the monetary problems will get solved and these won't be, the best assets to own. But right now, I mean, I think if you're looking at this game, maybe you've missed the first 2 innings, but, it's a 9 inning game. And, I mean, they're up a bit off the bottom for sure, but they haven't run, they're just starting to break out. And so I think we've got another 7 innings to go. And I fully expect to see a lot of these companies, grow by multiples of their present value. So, yeah, if you can pick good stocks in this area, you can do very well. And you got to get your timing right. And by the way, then you got to remember to sell. I mean, it's not as if, I mean, this industry is an industry with cycles. And there will come a time when everybody and their brother will be talking about gold and silver stocks, and maybe at that time some monetary reform moves will be coming around, and suddenly this won't necessarily be such a good place to be anymore because they won't be cheap and the monetary problems are getting fixed. And so I rent them. I mean I rent them for many years, but to hold this area over long cycles, it can go up a lot, but it also can go down a lot. And people need to keep that in mind.
Yeah, so the major issues with the mining companies, and I think there's a sweet spot for the gold miners right now because some of the issues that they normally have are rising energy costs with a huge oil price spike or diesel or something like that, or labor costs rapidly rising or metals prices crashing. I don't see huge risks of a huge energy or diesel spike like that could drastically destroy their profit margins, say over the next couple quarters. I think there's a sweet spot, my educated guess, for at least the next couple of years where energy prices will stay in a trading range for a little bit.
I think that's absolutely right, and that is important. I mean, the price of oil is an important input to most of these companies, and so the fact that oil prices have been relatively stable, kind of between 70 and 60 and $80 is a good thing. And if the price of oil were to shoot up substantially, that would eat into their margins.
Exactly. We see a huge diesel price spike, or when the oil price, I think, like during the pandemic, it crashed and then it rallied enormously. I think for 18 months, oil was the top performing commodity. And I think the top performing asset. So oil stocks were just on fire after the pandemic, and then the economy reopened, and then the gasoline prices and the diesel shortages and the prices just spiked enormously. So if we have one of those types of energy spikes, that would really, really hurt the miners because a lot of them are not hedging the energy prices right now.
Correct. That is correct.
Unless you're a royalty company shareholder, Lawrence, and you're buying like cheap
Well,
royalties,
yeah,
like,
that's a slightly different game, right?
well, yeah, those are the only ones I buy and hold. Like, those are the only companies. So, like the mining companies, you said you rent them, you trade in and out of them, you look for what's cheap, and then if the mine comes online or the company gets revalued, then you sell your shares and you redeploy the capital. The royalty companies are really the only ones that I buy and hold. I mean, I've owned Wheaton Precious Metal shares I think since 2011, and my cost basis for Sandstorm Gold's $4.
Right, exactly. I mean, You're right. I mean, the royalty companies, it's a different model and it does work, right?
Well, they deploy the capital as contrarians. So they're actually waiting for a bear market. They're waiting for a mining company to get in trouble. What I'd like to see, Equinox Gold. Equinox Gold, what has that Los Filos mine in Mexico that they don't want to develop anymore. They've talked about either writing it off down to zero. I mean, like a royalty company could help facilitate a transaction, moving that gold mine that needs a lot of capital. They can move it to a Mexican silver miner, a Mexican copper and gold miner, and then take like put a royalty or a stream deal on that to rebuild the mine because there needs to be additional hundreds of millions of dollars. That's like one of the mines that's having a problem. I think it's like over $2,000 an ounce costs.
Yeah, yeah. I would agree with you.
Yeah, so like that's Equinox Gold. I would look for that. That would be potential streaming deal right there with the Los Filos mine, moving that asset from Equinox because Equinox said they don't want to deal with it anymore. So it's probably going to get sold in the not too distant future to a Mexican gold or silver miner, and then that company will need to renegotiate the tax bill and spend a couple $100 million fixing the mine and the mill and stuff like that. But the costs have to come down. I mean, if it's producing over $2,000 an ounce cost, it's not a viable mine if there's a bear market.
Correct. That's absolutely correct.
Do you want to talk about like maybe which juniors are potential takeover candidates, or well, actually you said a lot of them are. You said that they're already getting
They
contacted by the
almost
miner.
all are. I mean, it's like, where do you stop? You know what I mean? I mean, they're all, I mean, you can go down a list and look at them. I mean, Banyan, I mean, Cabral, I'm on the board of. I mean, there's just so many companies that are so cheap. Um,
Do you think like the miners first will maybe buy like 20-30% equity and fund a drill program? Do you think that we're going to see more of those like what Agnico Eagle is doing first?
um, I don't know. Yeah, I think they should be. Let me say this, they should be, and I'll tell you why. A lot of these miners have spent years and a lot of capital to find and prove out reserves that if you were to start fresh today, it would take you years and even more capital to find. So it's, if you're a large miner with cash flow, positive cash flow, and the ability to access capital, I think, one of the issues you need to face or think through is how am I going to deploy that capital? What's the best use of it? And so, if you can buy somebody else's work at a discount to what it would cost you to do it yourself, well, that's intelligent and you should do it. So as we said earlier, I mean, I think that acquisition cycle is starting right now. And I think we're going to see a lot of that in the next couple of years.
I think we're also seeing is a lot of the mid-tier gold miners, senior gold miners, what they're doing first with their free cash flow, besides maybe announcing dividend increases or share buybacks if they think their stock is cheap on a cash flow multiple. What they're doing is they're investing in brownfields. So they're announcing like expansions at existing producing mines where they delayed a growth project at the mill or exploration budget. So they're announcing those things first, where they're going to expand the producing mill at a producing mine, say go from 150,000 up to 300,000 or something like you're now they're announcing expansion projects at the producing mine where they delay the capital expenditure.
Correct. That's exactly right. That's what's going on.
Okay, so last question here. You were just at the Bitcoin conference. You were a keynote
Yeah.
speaker there along with our other good friend Lynn Alden. Uh, what are your impressions of the Bitcoin conference right now? Do you think that a lot of value investors are coming in and they're going to buy the dips? What type of people are being attracted to Bitcoin right now?
That's a great question. It's kind of a mixed bag. I mean, it was nice to see a lot of friends, and there are a lot of old time solid Bitcoiners who own the underlying coins, and believe in the mission of Bitcoin. I would say, as we discussed a little before the show, I mean, there's an element of what I kind of consider to be a little bit of a fast money crowd, some Wall Streeters and more leveraged players showing up. And they're interested in this new idea, this Bitcoin treasury company, which, Michael Saylor was the first to do it. And he's kind of shown that you can engineer ways of getting capital and then apply, in fiat terms, and then apply that into a sound money alternative like Bitcoin, and that creates value. And so, there are a lot of copycats now, and some of them have done pretty well, and some of them are very overvalued. And it had a little bit of a feel of kind of the 1999 dot-com frenzy, and I mean, in that frenzy, I mean, the internet was very real in 1999 and 2000, but it got ahead of itself. And so I don't think the price of Bitcoin is particularly ahead of itself. I actually believe by the end of this year and into early next year, Bitcoin price will be 140, 150, $200,000. But I noticed some of these treasury companies are trading at very large multiples of their underlying coins, just kind of based on all the sizzle and excitement and what I consider to be fast money coming into the area. And so I would just caution people to be careful with those companies because there's no law that says they have to trade at big premiums to their underlying book value, and in a bear market they won't. And one thing we do know about Bitcoin is that it does have bear markets. I mean, I don't think it's going to ever be at 15,000 again, and typically the bear markets are between 50 and 70%. And my view is what's going to happen here is we're going to go from today's 110 maybe up to 180, and then everybody will be out over their skis too much. There'll be too much leverage. Something will happen. There'll be some bad news, and we'll go from 180 back down to 90. Well, when that happens, these treasury companies, some of them aren't going to make it. So,
By
and if
treasury
you're,
companies, do you mean, sorry to interrupt you, do you mean
that's right.
companies like MicroStrategy where instead of holding a lot of cash on the balance sheet, they stockpile, they use Bitcoin instead of cash?
That's exactly right. I'm talking about, yeah, the companies often have a very small operating business, and their business really is to sell stock, raise capital, or sell bonds, sell preferred stock, raise capital, and use it to buy Bitcoin. And and then they trade at some multiple of the underlying Bitcoin on their balance sheet because the market says they'll be able to buy more Bitcoin in the future, and they'll be able to sell their stock at a premium to Bitcoin and buy the Bitcoin more cheaply. And so they use this metric which they call Bitcoin per share, and as long as their Bitcoin per share is going up, they should go up in value. But the question is just what's the correct valuation of these companies compared to the Bitcoin they own? I mean, Michael Saylor is trading, the MicroStrategy plus or minus is trading at around 2x the underlying value of the Bitcoin that the company owns. Some of these other companies who are copycats are trading at, 5, 10, 15, 20x the underlying value of the Bitcoin that they own. And so, my view is that that's a riskier bet because that premium isn't necessarily set in stone. So,
And what you described with the volatility, if I could add points there, if you read the Satoshi white paper, and I would say, unfortunately, Lawrence, like I know you've read it, and we have friends who've written books about the Satoshi white paper. The majority of people buying Bitcoin now don't even have not read the Satoshi white paper. So
well, that's right.
he wanted to design what digital gold, and he wanted to put in what the halving process there to make it harder and harder for the Bitcoin miners to solve the math problems there. And kind of put a supply cap into it, similar to how difficult gold mining is. So basically that put in a process of like with the halvings and how difficult the math problem is for the Bitcoin miners for proof of work there for basically guaranteed boom and bust cycles with the Bitcoin price over, I don't know, 2, 3, 4 years. I've been covering Bitcoin since I think 2011, interviewing experts like Trace Meyer and many others over the years in the archive. And it seems like what every two, I know you track this probably better than me. Is it every 2 or 3 years we have a Bitcoin boom and bust cycle with the price because of the halvings?
Yeah, that's part of what drives it, but it's also just psychology, and it tends to be kind of every 3 or 4 years, but it varies. I mean, there are a lot of other parts. There are lots of moving parts, but yes, if one goes back and looks at the history of Bitcoin from the beginning, and this is very important, and this is where I think people have to be careful not to get hurt. I mean, there's some people who don't believe it now at 100. It goes to 200, and they're going to just have terrible FOMO, and so they're going to go out and they're going to buy it at 200, and then it's going to correct back to 90, and they're going to think they made a mistake. And so, what you need to do is, I mean, this is a volatile asset because we're in the process of changing our monetary system. And I'm quite confident that 5 years, 10 years, 15 years from now, the prices will all be much higher. But just as, a good comparable to this, Jason, is Amazon. I mean, Amazon is now 20% of, retail sales in the United States. But if you held Amazon stock from the beginning, there were multiple periods where it got drawn down 50 to 90%. I mean, after 2008, it went, or after, I think it was after 2008, it went down 90%. And yet, it came back and went higher because the business just kept growing. And, that's what Bitcoin is. And so I think it's very important for people who aren't in Bitcoin looking to get into Bitcoin. They have to kind of understand the volatility surrounding it and be prepared to ride the ups and downs. And actually, a very good way of dealing with it, in my opinion, is just dollar cost averaging over long periods of time.
Yeah, I know a lot of people that do that with they put like a fraction of their paycheck, so it's similar to dollar cost averaging with gold and silver. People are doing that now with Bitcoin. They kind of move a certain percentage of their monthly paycheck that's not tied to their bills, so their free cash flow each month from their paycheck or their business or something like that from their savings, it goes into Bitcoin.
Exactly. That's a very good strategy. If you've got a long-term time frame, the highs are higher and the lows are lower, as this thing gets more and more adopted. And I mean, I would just make one final point, and that is that, Bitcoin today, the total market cap of Bitcoin today is $2 trillion. So that's the total market cap of all investable assets. This is cash, bonds, stock, and real estate is $900 trillion. So Bitcoin is 0.2% of all investable assets in the world. 0.2%. It's dinky. It gets a lot of time in the press and stuff, but it's really still very dinky. And yet it's a pretty interesting innovation. And so, Bitcoin could go up 10x so that instead of 100,000 a coin, it was at a million a coin. And it would still only be 2% of all the financial assets in the world. So, I think there's a lot of room for this thing to go up in the future as more and more people come to realize that we live in a digital age and gold is great, but digital gold is even better because it's easier to verify and move around and store. So,
Well, won't it have to go up higher in price because the cost of Bitcoin mining, because of the way Satoshi designed it initially, because of proof of work and the heart of the math problems, the cost of Bitcoin mining itself for the miners is still going up. I think I saw that it's
well,
like
that's true. No, that's true. The mining costs are going up over time, and that has to do with the hash rate and the difficulty adjustment, and a lot of other things. But there's no law that says, the Bitcoin miners have to get all the reward out of the new coins. I mean, right now, it's 1.625 coins that are issued with every cycle, in every 10-minute cycle. But, there are also fees in there. And over time, eventually the new Bitcoin issued asymptotically approaches zero, and I think 2140, the very last piece of Bitcoin will be mined. But the fee, what'll happen is the network will be supported by fees. So you'll have to pay transaction fee. And today you do pay a transaction fee, but because there's enough network capacity and there aren't that many on-chain transactions, the fees are generally modest. Although when things get really busy, some people pay good, large fees to get a transaction done. But yes, I mean it will, that piece of the business is complicated, but it will all work out in my view over time.
I mean, in the short term, for a certain amount of time, a few months, maybe the miners can verify the transactions at a loss. But over time, like they're gonna stop doing that then if there's not a profit to be made to verify the transactions and run the full Bitcoin blockchain protocol. So I mean,
That's
like,
exactly right. And that means there'll be less, hash rate, and so the difficulty adjustment will change. And that, we saw that happen when the Chinese miners were put out of business. I mean that the hash rate went down and it became so that all the rest of the guys got to get more Bitcoin because the adjustments became easier. So
well, I want to thank you so much for your time today, Lawrence. If my listeners want to check out your newsletter, your gold or Bitcoin opportunity fund, or check out your
all of
book.
that, yeah. So I'm on Twitter at Lawrence Lepard. The book is available for sale on Amazon. It's called The Big Print. It's in all kinds of formats, including audio and EPUB. And then my website is ema2.com, and I have a free newsletter that talks about macro events. We won't spam you. You can sign up for it. And every quarter, my partner and I write something about that. So, I'm pretty easy to reach out to on Twitter. My DMs are open. So. Yeah, I mean, to me, I just, my message is in general that I think people need to be aware of the inflation risk that exists given what's happening in today's monetary system. It's gotten worse, and people need to pay attention to it because the people who do pay attention will be financially advantaged in 10 years versus the people who don't.
Yep, and the
So,
problem is fiat currencies and government bonds. These
yeah, I mean,
basically destruction, wealth
yeah, I
destruction.
mean, it's if you think the government's messed up, and I don't think there are a lot of people in the country that don't believe that. If you think the government's messed up, you got to vote with your feet.
Well,
And
your
vote for,
savings, yeah,
you got to vote with your feet, your savings feet, which is to say you got to vote for sound money.
well, inflation hedges, yeah, currency debasement hedges, inflation hedges, because I think best case scenario, stagflate, tax lie. I see all these governments just running like bad finances at this point. I mean, they don't have good options. Look at Japan. Japan doesn't have good options. The US doesn't have good
Nobody does.
options. European Union doesn't have good options. We could go down the list.
Nobody does. We're trapped. I mean, the long run has arrived. I mean, Keynes said in the long run we're all dead. And he's dead, but we're still here, and the long run is arriving.
Or it's the road to serfdom if you're not careful. I mean, if
Um,
you're holding a lot of fiat currencies as your savings or government bonds, if you're a bond fund manager out there, a Wall Street bond fund manager holding US Treasuries the last 3 or 4 years, you got absolutely crushed.
yeah, exactly.
Well, congratulations on your book, man.
Thank you.
Top two on Amazon.
Oh, I didn't realize that. I'm not sure. Yeah, thank you so much. And like I say, I always enjoy talking to you, Jason. You bring a very thoughtful perspective to all this. So thanks for having me on your show.